Hi guys, welcome to the Saving Money Show with me, your host Sean. We've got a lot to get through. Hopefully you'll stick around for my little bit on Workhorse, but we're going to start with stocks that I spoke about over the last month. We're going to start with as you can see how many. We're going to start with penny stocks, and before then we're going to start with a company I'm looking into and probably pick up. Future PLC. Now it has dropped 17% and it has little debt, 0.15% dividend, so it wouldn't be picked up as a dividend stock, but I think that could be improved on later over the next few years. However, as I said, they have little debt, they've got money. This is one like a Marmite. People either love it or they don't. They are spending money picking up new business, and they've just gone in go compare for $794 million, and you have people thought that was too much, but however I think it will be good for them. I think that you have to look at the fact when Warren Buffett bought his Coca-Cola shares, it wasn't giving anything as a dividend. It was a next to nothing dividend stock. Now he receives more in dividends than the CEO of Coke. So you've got to think of this as a grower. And this is the thing about Go Compare. Personally, I do not use them because I find their comparisons are more expensive than if you use someone else, because they try to keep too much of the commission for themselves. Now, but as a business, I can see it as interesting. Now, Platinum Group Metals. This is one I said before, and it's gone up. Am I selling? No. I think this is one that can continue to go up because it mines a whole manner of things, including materials that go in EV cars. It's at its infant stage, and I think it will grow. This is one which we've seen here has risen and come back down again. I think will rise again. It's the retail stocks that we've called out because of Black Friday, and we've seen with DXLG. You know, I've done videos on each of these, and with Genius Brands, you know, I mean, we got in at 120 and it's gone to 145. I think it has room to run. I'm not going to stay in too long because I know how volatile it is. Now, Iconics Brands, again, I think it's one that's looking pretty good when we get the results from Black Friday. Now, in Europe, I've done videos on this, countless videos on this, and with the last run up, took out my initial investment, and my shares in this are all free shares. I'm considering picking up another position in this because I do think, well, I think this may trade sideways for a bit, but I do think this will go up within the week or so, somewhere next week. Isaiah, well, what can we say about this? Just see it go straight up. Now, when it crossed the $1 mark, I sold out my initial investment. It came back down again, but I do think it will go back up. Tsla Pharma Corporation, you will have heard me speak about them making a splash in the COVID treatments. They've suddenly gone up when they announced it, and it's come back down. I think it will go up again. Adamis Pharmaceutical, another one, and you see here. Guys, welcome to the Savvy Money Show with me, your host Sean. If you want to help support the channel, don't forget to smash that lovely like button, and don't forget to hit the bell notification if you want to be reminded of when a video gets uploaded. And why not smash the sexy subscribe button? A lot sexier than me, just ask the wife. And because I upload multiple times a day. And while you're at it, why not comment in the comment box down below? I'm also putting a load of free links in the description box. Why not check them out? And if you're looking for a free trading platform on which to trade your stocks and shares, why not check out Freetrade, trading with 212 and stake. You get a free share worth up to £200 or dollars for signing up and depositing a small amount. So we've made a few cents per share, but on stock that only has a $41 million market cap, you know, it doesn't need much volume to get it pushed. Check. I've said this before each of its points. I said it back in March, I've said it back here and here. Now, I do think the run up this time hasn't finished. And why is that? Because, sorry, this was on the wrong one. Because we're all gonna lock down to electric. And the kids need education. Now, Organigram Holdings. Now, I went for this because they are going to have their vote in Congress on the MJ space, and it's run up, but not as much as the other MJ stocks. And I think it still has room to run. And this is a massive Canadian one. I do think if you went in this after my video on it, it will be worth holding. I did a video recently on SGBX, 5G blocks, and you can see it's had a run up. Although it's small, I do think its main run up is yet to come. It is partnered with Blink, and you know that Blink charging has had its run up, and it near enough mirrors it, but it's had more of a run up at the start, so this should go up even more. Now for something that isn't a penny stock, because I know some of you guys like something with a bit more meat on the bone. No, and it's something that people are not talking about. We have National Vision Holdings, ticker symbol EYE. I think it's a company, has high PE obviously, but I think you need to keep an open mind when you go through the balance sheet, because it doesn't look good when you look at 234 million assets, current assets, and current liabilities 273 million. But that's because you have 13 million debt and you have deferred revenues, which means they've received the revenue but it's been deferred. It means that they have to do the job that they've been paid for, you know, and they have things like that. They have accrued liabilities. You know, some of these are where the property of their where they're operating from has decreased and they're using it as a write-off, you know, and all the way down even to the total liabilities they've done the same. So it's not as bad as it seems. And you see with total liabilities is 1.2 billion, but the total assets are over 2 billion. So I think this is one that to keep an eye on and look into a bit further. A lot of people just see the liabilities to assets and they move on by. Now the free cash flow is 63 million. Yeah, I just think it might be worth a punt. I don't like to take punts in the stock market, but you know what I mean. Now we have Alcon, which is a spin-off from Novartis, and we'll look at their liabilities to assets. The total liabilities is 8.3 billion. The current liability is 2.3 billion. Total assets 27.6 billion. Current assets 4.2 billion. They have no problems here, and I think this is one which is well worth looking into. It's not profitable at the moment, but I think it will be profitable fairly soon. I meant to mention how with National Vision Holdings, they've doubled their expectation last quarter of earnings per share, so I think that they are also going to be fine. I mentioned Workhorse. Mahindra, why it pulled out. Firstly, because although it wasn't an American company, they were classing themselves as an American company because they were partnered with a company, a manufacturing plant in America, so they were classing themselves as an American company, but they didn't respond to the Postal Service request for information on adding autonomous technology to its drive delivery fleet. Now, at Lordstown Motors, once the equipment is running at full speed, the cycle time would allow production of a new vehicle every 120 seconds. Now, why is that important to us at Workhorse? Because at the moment, Lordstown Motors is only using 30% of the plant. what are they going to do with the other 70%? I understand they may not need all up and running at the moment, but if they have all these pre-orders, surely they would want to have it up and running. Same as this, maybe they're keeping it to one side for the USPS contract, maybe. This is just something to think about. Anyway, I hope you don't mind giving me a like and comment in the box below. It does help with the YouTube algorithm. And don't forget to subscribe. I'll see you in the next video.